Welcome to the Drill Down, in-depth answers to oilfield questions. I'm Richard Spears.
And I'm John Spears.
We are going to talk about this kind of like a two-part series.
Oh, okay.
This podcast and then next week's podcast.
Yes.
We're going to talk about the upcoming oilfield market report that will be coming out on October 1st.
One of our flagship publications.
It's the big flagship report, and our dear friend David Ott and his trusty sidekick, Missy Parker, have ultimate responsibility for it.
Yes. So again, this report adds up the revenues in 32 different segments of the oil patch on a global basis. So it's a benchmarking of how much is being spent from sun up to sundown, as it were.
Or it's the revenues earned by 1,000 or more oilfield service companies.
There you go.
Schlumberger being the big one.
Yeah.
Baker's a big one. Halliburton's a big one.
On down the line. Yeah. So this
Butch's rat hole service.
So this is, we're talking a little bit about what 2021, the winners and losers of this year. Is that a safe summary?
It's the market segments that are this year showing the greatest amount of year-over-year growth.
Yes.
And those that are showing the greatest amount of shrinkage.
Okay, there you go. Well,
year over year.
Just a quick question. Did any segment grow last year? Did spending in any segment?
Last year,
just off the top of your head, what can you remember?
No.
Okay, I would be surprised if there any of them had, given
bankruptcy attorneys. they grew. No, but of oilfield service sectors, no, none.
Okay.
And rarely do you see a year when everything falls.
Yeah.
Every once in a while, you see a year where everything rises.
Yeah, all right, okay.
But
those years, I think most folks can come to work drunk and still make money, right?
That's how we grew.
So tease us about what's going on this year.
So it's kind of interesting. If you look at these 32 market segments, that not quite, somewhat over half of them are showing this year, year-over-year growth.
On a global basis.
So let's just say 60% of the market segments have grown.
Okay.
And 40% of the market segments have fallen.
Okay.
It should not be a surprise to you at all which market segment has grown the most.
This year?
Yeah.
Relative to last year?
And let me just give you a hint. It's all driven by work in the United States.
Okay, I was about to say, I think it's the frac market, because that one we have seen, in terms of frac jobs anyway, tremendous growth, 30% growth in terms of frac job activity. So revenues are up too.
Yeah. So the thing that the little nuance about this is, we're looking at 2021, the entire year, versus the entire year 2020. Well, last year we had a really good first quarter. It was business as normal until it was a disaster.
Yeah, that's right. So
I take
the lights went off. Yeah.
All four of last year's quarters.
Right.
And then you compare them against all four of this year's quarters.
Yes.
And you get a frac market that this year is up on a dollar basis. 16%.
Okay. All right.
Which means
solid
that
growth.
You've not just offset last year's really great first quarter. You're doing really quite well.
Yeah.
But the next best one, you wouldn't. It was a surprise to me.
Hit me with it.
Offshore construction.
Oh, that's interesting. Okay.
I know, because if you take the parallel, the offshore construction is often associated with offshore drilling.
Well, yes, and mostly international, right? Outside the U.S.,
That's right.
95% of it's got to be outside the U.S. So a very different driver. Yes.
So get this. The second highest growth one, which is offshore construction.
Yes.
The offshore contract drilling one was the third worst one.
Again, this was a revenue-based figure, so day rates went south in a hurry in that segment. That's no doubt contributed to the problems on the revenue side, right?
And there's a lag. You drill exploration wells offshore. You drill development wells offshore. About the last thing you do is construct offshore.
Yeah.
So I think what you're really seeing this year is related to what drilling activity from a couple years ago. And drilling activity a couple years ago was beginning to rise.
Yeah, that's right. And drilling activity this year, particularly in the offshore segment, has really fallen because who is interested in doing exploration? Demand is still below what it was a year ago. Looks like there's plenty of reserves, so the whole interest in exploration has really diminished, and that takes a lot of drilling rigs off the picture. But if you're still developing fields, then the construction side of things holds up a lot better. So there is a reason, there's a story that hangs together that explains two very different directions of those markets.
So if you take the market segment that is the most highly correlated to exploration is our geophysical equipment and services business.
Yep. Seismic surveys, the data processing, the
software
sales, all that good stuff. Yep.
The geophysical market segment will fall this year about 10 or 11%.
Even from last year.
Even from last year, and last year was down. So when you look at a market segment that not only doesn't get any love, but people are abandoning it like rats from a sinking ship, it's the geophysical.
You know what that tells me? There's fewer and fewer doodlebuggers out there. So
there's not hardly any of them on a boat or with a divining stick.
There you go. Yeah.
Okay, so the bad areas where things are falling this year are there's petroleum aviation.
Yeah.
There's cementing. There's floating production equipment. Those that are right on the bubble.
Yes.
Artificial lift.
Interesting. Okay.
So it fell last year.
Right.
It grew this year. Well, quarter by quarter it fell. It rose this year quarter by quarter.
And so it is.
It's kind of like 60, even.
60. So let's finish on a strong note. What are the better segments this year? And then let's see if we can just broadly paint why the winners and what's common among the winners and so forth.
Right. So some of the big areas: specialty chemicals, oil country tubular goods.
Oh boy, prices have shot up there. That's
a price thing, not necessarily a volume thing.
Yeah, absolutely.
You've got surface equipment, which are wellheads and frac stacks, so that's tied to the American hydraulic fracturing market. Directional drilling services, driven completely by rising drilling activity in the United States.
Interesting. Yeah.
And fairly stable offshore. Well servicing, not great, but eking at a little bit of growth.
Yeah.
Drill bits, a little bit of growth.
Yeah, I guess.
And that's one of our favorite areas. So you've got this area that if it was U.S. related, and in fact U.S. completion related,
yes, it
did pretty good.
Yeah, I mean the completion market here in the United States and in Canada for that too has really grown this year relative to last. That is where we've seen the biggest growth. Like I said, 20 to 30% on the completion side on land in North America in terms of activity. So whereas that and those kind of numbers are triple the rate of what we've seen in terms of growth, year-over-year growth on the drilling side. So this completions related American side is juiced because of. Well, our favorite story is how the inventory of drilled but uncompleted wells has fallen, and that's kind of a one-time thing. We're seeing it happen. We saw it began to happen at the end of last year. It's clearly in play this year, but I don't know that it's going to extend into 2022. So enjoy it while you can. Is what I'm saying.
Yeah, because
for the completion guys, this is
right now. Some of our projections for next year assume that there's a little bit of continuing DUC reduction next year.
Right.
But more and more you look at it again and again and you say, I'm going to exhaust it. I'm going to exhaust the excess DUCs to their irreducible minimum here by Christmas time.
Something like that. Yeah. Right.
So moral of the story: don't build any more frac trucks. Have I said that before?
Once a podcast, I think.
So next week we're going to talk about the 2022 forecast and what the OMR says in it. And of course, the OMR gets published October 1st, and all of our clients will be receiving that.
So through the glass darkly, as it were, into 2022. Is there anything else that we have to?
The puzzler.
The puzzler, of course.
I got the brand new puzzler.
Oh,
all right.
boy.
You know how many times the puzzler is mathematic?
I've noticed
or
that.
a logic one.
Yeah, I've noticed that too.
Today it's geographic.
Ooh, okay.
All right, so are you ready for this one?
I've got my map out.
All right, so everybody knows. In fact, I'm just going to go ahead and ask you that the two here we are in the United States. The two closest countries to the United States are those that touch us, which are
physically Canada and Mexico.
So that'd be number one and number two, number two and number one, the two closest countries. But if I were to ask you what's the third closest country, most people, if you just go grab somebody on the street, they go, well, it's Cuba.
And most people,
because you can float there on a rubber raft.
Yes. Okay. Yep.
Or somebody can swim that far.
I presume they can. Yes.
But That's not true.
That's not the right answer.
Cuba is actually the 5th closest to the United States.
So you're telling me that there are 2 other countries.
That's right.
Closer to the U.S. than Cuba.
So so today's puzzler is the following. What are numbers 3 and number 4 closest countries to the United States of America?
Right.
And if you think you know the answers to number 3 and number 4, put them in an email, send them to drilldownshow@gmail.com. And next week, if anybody gets both answers right, we'll read their name out loud. But you got to get both answers right.
That would be fair. Okay, and maybe we'll offer them a trip to either of those places, assuming that
they want to go.
They have vaccine passports.
Anyway, thanks for listening to The Drill Down. I'm Richard Spears.
And I'm John Spears.